Welcome back, students. Today we will be starting chapter number 8, Bank Reconciliation. As always, these are the objectives of the chapter. You can pause and take a quick look. I will not read these because I'm going to cover these in this chapter anyways. Okay. Now, first of all, you have to recall something. See, every business maintains a bank account, right? We have discussed that bank account is relating to the money in your bank, in the business bank account, right? So, where does the business record all the transactions linked to its business bank account? In the cash book. Chapter 5 we have discussed in detail. We record all the bank transactions in the cash book. When money comes in, we record it on debit, right? When money increases in your bank account, we record it on the debit side of the cash book. And when money decreases, we record it on the credit side of the cash book. Why? Because bank is an asset for the business. Asset, right? So we are maintaining all the transactions in the cash book. So we know how much money came in, how much money went out, and we should also know the end of the month balance. For example, at the end of 1st Jan, we had $10,000 as the balance left over, which means we have $10,000 in the business bank account at the end of Jan. Let's say on 31st Jan, right? Now, the bank has your account, okay? So how is the bank keeping a track of all the transactions? They maintain a bank statement, right? A bank statement. They also send you a copy at the end of every month, right? They can email it to you, and they might also send a physical copy. I will show you what a bank statement looks like. But how is the bank making transactions or recording transactions in your bank account? In the bank statement. You as the business accountant are preparing the cash book, whereas the bank prepares the bank statement to record or track your bank transactions. Money coming in, money going out. But remember one thing. You are a liability for the bank. You're not their asset. You are a liability because they have your money and they have to pay you back. So, when money in your account increases, they will record it on the credit side, and when money decreases, they will record it on the debit side because they will apply the rules of liabilities. Remember dead click. Liabilities when they increase are credited, and when liabilities decrease, they are debited. Okay? So, we are a liability for the bank. Remember that. But the bank account for us is an asset, right? Now, bank statement. We always receive the bank statement on the last day of the month. I have told you either by email or a physical copy or both. So, when we get the bank statement on 31st Jan, the balance after all the transaction should also be $10,000, right? Because we are also keeping a track in the cash book. So the balance should be the same logically, right? Okay, let's move on to the next slide and then we will continue. So this is what a bank statement looks like. See, the name of the bank and all those details are there. Okay, you don't have to worry about those. The dates are given. These are the details. This is debit, credit, and balance, right? So see, balance brought forward or balance brought down is the leftover money from the previous month. So as you can see, it's 434 credit, which means, as I have told you, it's a liability for them. So they are tracking it as a credit balance, but for us, it is a positive balance. So it means by looking at the statement, we can tell we have $434 in our bank account at the start of the month, which is August in this case, right? And then these are all the details of the transactions that took place, right? This is money going out on the debit side, this is money coming in, and then they keep balancing the statement after every transaction. For example, let me give you this example. On 5th August, we have withdrawn some cash worth $20. So our balance is reduced to 414 from 434, right? So now we have $414 available. Then we also withdraw some more cash, a check, right? And then we have deposited some money as well, which is increasing our balance again, and so on. At the end of the month, we are left over with $826.8 in our bank account. And it's a credit balance. It means it's a positive balance for us. Positive. So we have $826.8 in our bank account according to the bank statement. This is how you read a bank statement, right? Moving on. Now, this is the cash book which is prepared by the business. You are aware of the cash book because we have discussed this and studied this in detail in chapter number 5, right? The purpose of the cash book is to record money coming in, which we record on the debit side, and money going out, which we record on the credit side. We usually have 3 columns on each side: discount, cash, bank, discount, cash, bank, right? But in this topic, we will not worry about preparing the discount and cash columns, so we can cross these off. We are only worried about what is happening with our bank account. The money coming in, we have to track that, and the money going out, we have to track that, right? So that we can look at the final balance and then compare it with the bank statement. All right. So the format simply becomes this: date, details, and then amount, which is for bank. Money coming into the bank will be recorded on the debit side, and money going out obviously is recorded on the credit side. So date, details, bank. So as you can see, I've skipped the discount and cash column because there is no relation of those in this topic. We are only worried about what is happening in our bank account, right? So that we can compare it with our bank statement and find any differences if there are any. Okay, that's what we are trying to do. Moving on. Now, let's move on to a simple example. One second, let me move this away. Okay. See, this is a bank statement, right? This is a bank statement. And this is our cash book for the same business. How do we compare a bank statement with the cash book? See, I have told you we are a liability. I'm repeating one more time. We are a liability for the bank, right? So when the money in our account will increase, they will record it on credit, because liabilities when they increase are recorded on credit, and liabilities when they decrease are recorded on debit. So whenever we will deposit money in our account, they will record it on the credit side, and whenever we withdraw money out, we take some money home, they will record it on the debit side, because their liabilities are decreasing when we withdraw money out, right? So you always compare the debit side of the cash book with the credit side of the bank statement. Remember this. While comparing, you will always compare debit side of cash book with the credit side of bank statement, and vice versa. Okay? So let's start comparing. First of all, we have a balance of 100,000 on the debit side. It's on the debit side, it means it's a positive balance, because in our cash book, it is an asset account for us. What is bank? Bank is an asset for us. When assets increase, we record it on debit. When assets decrease, we record them on the credit side. So this is a positive balance for us. So that's why it's on the debit side. Is it present on the bank statement as well? Yes, balance BD, but on the credit side. Okay, so this is fine. We can take these. These are present on both, and we have identified it, right? Now, there is a payment for insurance. So that's why they have debited it, because money is decreasing in our account. So their liabilities are going down. And the leftover balance is 97,000 after that, which is fine. But we don't have to look at the balance after every transaction, because we are not keeping a track of the balance after every transaction in the cash book. We can just check the final balance in the end, okay, which is this. So if they have debited 3,000 on the debit side for payment, we should find this on the credit side in the cash book. Is it there? Yes. As you can see, payment insurance 3,000. So this is also fine. You can take this. This is present on both, right? Then moving forward, account transfer money in, which means we have deposited 500,000 more into the bank account. How do I know that? Because it's on the credit side. Okay? So we have to find this on the debit side of the cash book. And as we can see, 500,000 are there. Capital is mentioned. Okay. Now, 10,000 more are being deposited into the bank account, as this is on the credit side. Check deposit from ABC, 10,000, and we can see it is also present on the debit side of the cash book. So you see how I am comparing? I am comparing the credit side of the bank statement with the debit side of the cash book, and the debit side of the bank statement with the credit side of the cash book. Now, electricity payment, it's on the debit side in the bank statement, so I should find it on the credit side in the cash book, and it's there. Okay. Then water utility, again it's on the debit side of the bank statement, so it should be on the credit side in the cash book. Payment for car loan, debit in the bank statement, so credit in the cash book. And then account transfer out 80,000, which are drawings in a way, so drawings on the credit side. Okay. I'm explaining again for only one of these. Let's say payment of car loan. Okay, when you pay for a car loan, okay, I'm paying how much? I'm paying $3,500. So the money in my bank account is decreasing, right? That's why I have recorded this 3,500 on the credit side in my in my cash book, right? Because when your assets decrease, you record them on credit, and bank is an asset for me, right? But the bank will record this on the debit side. As you can see, 3,500 is on debit for payment of car loan. Why? Because I am a liability for the bank. So when I'm taking money out of my bank account, their liabilities are decreasing. When liabilities decrease, we record them on the debit side. These are rules of dead click, debit and credit, which we have learned using dead click, okay, which is chapter number 3. As always, the most important chapter to build up your basics. So you should know all this, right? Now, once we are done with all the transactions, we have to look at the final balance in the account. So as you can see, 521,400, which means we are left over with this much money in our bank account at the end of the month, right? This is prepared month by month. So in our cash book as well, we should have the same balance. And as you can see, this is my balance carried down, which will become my balance BD for the next month as 521,400. So it's fine. There are no differences. We have compared the bank statement with the cash book and found no differences, right? So the amounts are equal, which is fine. There's nothing unusual. Okay? All good. Now, moving on. What is bank reconciliation then, and why is it required? See, for now, as you saw in this example, the balance of the bank statement and cash book were same, but it is not always the case. Okay? Sometimes the balance of your cash book will not be equal to the balance shown on the bank statement. Okay? And when this happens, we have to prepare a bank reconciliation statement. Okay? What do we prepare? We prepare a bank reconciliation statement. And the purpose of this statement is to explain the difference between the balance. That if 10,000 are showing on the cash book, for example, why is the bank statement showing only 9,000 as the balance in your account? Why are they unequal? Okay? They should be same, as I have shown you in the previous slide. Why are they unequal? We explain these differences using comparing them and then making a bank reconciliation statement to identify and bring the balances equal. Okay? Let me read this as well. Bank reconciliation is a process that explains the difference between bank balance as shown in the bank statement supplied by the business bank and the corresponding amount shown in the cash book. It takes the form of a working document known as a bank reconciliation statement. Understood? In simple words, we will make a statement, okay, to compare the cash book with the bank statement and then to find the differences and make them equal in a way so that we understand that why are there differences. It's for our understanding only, that we should get the point that why are the balances not equal. We should get satisfied at the end of the day. Okay, so let's move on. some important terms before we start. See, one second. In the previous slide, I have written that why are there differences? Okay? Differences in the balance. Why? Can you guess? Can you start thinking that why would there be differences in the balance shown on the cash book and the bank statement? Why? Why are the amounts not the same sometimes? How is it possible that the cash book is showing $10,000 and the bank statement is showing only $9,000? It can be due to some errors, it can be, but that is not usually always the case. It's only sometimes the reason. There are some other reasons as well, which I will discuss with you now. Now listen to me. Moving on. See, some things such as bank charges and bank interest. As you know, the bank charges an amount from you every month, maybe for SMS service or for withdrawal fee and all these things. They make some charges and we have to pay them to the bank. When will we get to know about these charges? Because they are variable. They vary from month to month. So we can only find about these charges at the end of the month when we get the bank statement. Till then we are not aware about these. So we will not have included these in our cash book till we get the bank statement, right? So things such as bank charges and bank interest, which are recorded by the bank, but we have not recorded these in the cash book because we were not aware or we missed out something. So we include these after we receive the bank statement at the end of the month, because these things are usually calculated at the end of the month by the bank anyways. Now, what are standing orders? The business orders its bank account to pay a fixed amount of money to an organization or individual on a fixed day. So for example, I have internet for which I have to pay $100 every month. So I will simply assign my bank to pay this amount automatically at a specific day every month, because I know I have to pay $100 every month to my internet supplier. So I've instructed my bank to pay this amount month after month to my internet supplier automatically. This is a standing order. It's a fixed amount of money paid on regular intervals on fixed dates. Direct debit is also a payment through our bank account, but the amount can vary. It is not the same month after month. For example, your electricity bill, right? Your electricity bill can vary. It will not be the same month after month. For example, in Jan, if your bill was $200, it is not necessary that in Feb it will also be $200, right? It can vary depending on the usage, right? So it can be $300. So it's a variable amount. So direct debit is also a payment through the bank account in which we have allowed our bank to pay a creditor, and this a variable amount is paid by the bank on a fixed day, or the dates may also vary, right? Sometimes you get the bill on 21st Jan, sometimes you will get the bill, let's say in Feb you got it on 25th Feb. So the dates are also varying and the amounts are also variable. So that's the main difference between a standing order and a direct debit. These are fixed amounts while these are variable amounts. This is how you can remember this. But both are payments through the bank account. That's important to know, that these are both payments through your bank account. You're paying someone from your bank account. Now, dishonored checks. You know what dishonored checks are. These are those checks that are rejected from the bank. So these are always recorded on the credit side of cash book. You should know that. What is a dishonored check? Checks that are disallowed or that are rejected by the bank. You know the reasons. We have discussed those in chapter 5 when we were doing cash book. Go through that if you don't remember. Electronic direct payment. These are just bank transfers. Online payments through your bank account. Simple. So all these standing order, direct debit, electronic transfer, these are payments through your bank account in simple words. Still, I have given you some detail because they sometimes ask you the difference between a standing order and direct debits in your CAIE examinations. We are done with the theory part. Let's move on to the practical work. Now, this is how you will get a question. Okay? I'm going through this step by step, starting with the first step, which is comparing the cash book with the bank statement. This is always what you will do. Okay? You will always compare the cash book with the bank statement. Both of these will be given in the question. You have to compare these. Now let's start comparing. I've told you, you will compare the debit side with the credit side. Okay? Cash book debit side should be compared with the credit side of the bank statement, and the credit side should be compared with the debit side of the bank statement. This is the rule you have to use when comparing these two. Secondly, you ignore the dates. Ignore the dates. Just look at the details and the amounts. Ignore the dates, because dates can be different on cash book and bank statement depending on when the transaction was recorded on the bank account. Okay? So ignore the dates. They are not the same on cash book and bank statement. They can vary. So you don't have to worry about comparing the dates. Only compare the amounts and details. Okay? Now, let's start with the opening balance. The opening balance is shown as 3,000 in our cash book, which means we have $3,000 left over from the previous month. So let's see, is it present on the bank statement as well? Yes, the balance is 3,000, which is fine. So that's why they have ticked this and ticked this. This is fine. Now let's compare the debit side with the credit side. So Jones 500 on debit. We should be able to find this on the credit side. Jones 500 credit. It's there. So we have ticked this and this. S. Mary 450 on debit. So it should be on the credit side in the bank statement. Is it there? S. Mary credit side 450. Yes. So that's why they have ticked this and ticked this. Okay. Now, let's look at the credit side of the cash book and compare it with the debit side of the bank statement. C. Meena 500 debit. So is it there on the, C. Meena 500 credit. So is it there on the debit side of the bank statement? Yes, it's there. Debit side 500. So we can take both. James on the credit side 100. So it should be on the debit side of the bank statement. Yes, it's there. So take this, take this. Okay. And then balance the cash book. Once you have balanced the cash book, you have figured out that your balance is $3,350. Okay? I'm erasing this and writing it here. What is the balance on my cash book? It is $3,350, which means according to me, I have this much money available in the bank account right now. Okay? But when I looked at the bank statement, I can see that the balance is 3,650. Okay? How much? 3,650. How is that possible? Why is there a difference between these two? The bank statement is showing 3,650, whereas my cash book is showing 3,350. So there's a difference, as you can see. Because there are some things that were present on the bank statement but missing from the cash book. What do we call these things? These are present on the bank statement but missing from the cash book, and we have circled those things. Okay? So what you will do is you will circle these things. Credit transfer received. Let's look at this one first. Okay? So we have received money online from someone, but we were not aware about this one. Okay? We were not aware about this one, which means you have to include this amount to your cash book now. Okay? In this balance, I have to include this amount because this is coming into my bank account. This is credit transfer received. It's on the credit side of the bank statement, means I should record it on the debit side in cash book. Okay? And this is missing from the cash book, as you can see. It is on the bank statement but missing from the cash book. Similarly, we have circled bank charges as they were present on the bank statement but missing from the cash book. And as you can see, they are on the debit side of the bank statement, so I should record them on the credit side. We flip the sides as I have explained it to you. So bank charges of $100. Obviously, we pay bank charges, right? So we have to record it on the credit side of the cash book as it reduces the money in our bank account. So how do we record these things in the cash book now. The cash book is already prepared. As you can see, this is the cash book we have prepared. So how do I include these things that are missing from the cash book into the cash book now? This is called updating the cash book. Okay? This is the first thing you have to do. After comparing both, the first thing you have to do is update the cash book. Okay? Which simply means include or including the things that are present on बैंक स्टेटमेंट, ठीक है, but missing from the cash book. Understood? So what does updating the cash book means? Including the things that are present on the bank statement but missing from cash book. So we have circled those two. We have to include these things into the updated cash book now. How do we start? Okay, so you will start with the balance brought down, which is this amount, 3350. This is your end of the month balance according to you, right? So you will start with this 3350. Now, I've told you we have received money from someone, okay? So we will record it on the debit side as credit transfer. And we will also name the person who sent this amount. Okay? This is a worked example, so the name is not given. But in CIEs, the name will be given. I will do another example in which there will be names. Okay. Bank charges 100. We pay bank charges. So we will record bank charges on the credit side as $100. Okay. When do we update the cash book? On the last day of the month when we receive the bank statement, or on the first day of the next month. Now, let's balance this. Let me use my calculator. 3350 plus 400 gives me 3750. So this is obviously the heavier side. 3750. 3750. So what is the missing figure required on this side? 3750 minus 100 gives me 3650. This is my balance carried down on 31st Jan. So on 1st Feb, I should have balance BD of 3650, which means I should have this much money in my bank account, 3650. As you can see, now the balance on the cash book or the updated cash book and the bank statement are the same. So we have included things that were missing on the cash book but present on the bank statement, and now we have come to the same balance. We were not aware about these things. Once we get to know about these things, we will include them, and then now our balances are equal. Okay? This is the first step. Now moving on to a technical example in which you will have to do one more step after this, which is preparing the bank reconciliation statement. Let's move on. Okay. For now, we have discussed those things that are present on the bank statement but missing from the cash book. There are also a few things that are recorded by the business. As you can see, transactions recorded by the business but not by the bank. Okay? Which means we have recorded these things on the cash book but they are not present on the bank statement. Okay? So there are two such things which might be present on the cash book but missing from the bank statement. The first one of these is an uncredited deposit. The money that you have deposited in your bank account but it is not showing on the bank statement yet, or it is not present in your bank account yet. Why is that possible, or how is that possible? Let's suppose you got a check from someone. Okay? Someone gave you a check, you sold goods to them and received a check, and then you have the check with you. Once you have the check, where will you record it? You will record it on the debit side of the cash book, right? Then you will take this check to the business bank account and then deposit the money in the bank account. Okay? Now you took the check, you have given the check to the cashier, but due to some reason he was unable to transfer this money to your account yet because the system was down, or it was, let's say, 4:30 p.m. when you went, and the bank closed at 5 p.m., and then Saturday Sunday came, so it got delayed due to some reason. Okay, he was unable to transfer the money to your account yet, but he has the check. He will do it as soon as possible. Okay, but once you look at the statement, this amount will not show in the bank statement, right? Because it is not registered or it is not entered in your bank account digitally yet. Okay, but you have recorded this in the cash book. This is called an uncredited deposit or uncredited check. Let me read this. A check that is paid into the bank and debited in the cash book. Okay, we have given the check to the bank, we have made the entry on the debit side in the cash book. However, the check has not yet been cleared by the bank and entered in its records. See, they have not cleared the check and they have not made a record in their bank statement or in your bank account. These checks will therefore not appear on the bank statement. Such checks are known as uncredited deposits. Okay? Now, unpresented checks. This is the other way around. Now see, you have given a check to someone. Okay? You have given a check to someone, but that person, let's say he was very lazy or he was busy. Okay? And this person did not go to the bank to deposit the check in their account. What will happen? When you give the check to this person, obviously you will record it in your cash book there and then on the credit side. Okay? Because you're giving the check, money is going down, so you will record it on credit side. But when you get the bank statement, it is not showing on the bank statement. It is missing. So how is that possible? This is only possible when that person did not go to the bank, okay, to collect the money. Okay? Maybe he delayed it. Maybe he thought he will go later. He will go after a week or so. So it is possible in that case. Okay? So unpresented checks are those checks issued by the business but not presented by the payee. Payee is the person receiving the check. So not presented by the payee to the bank. Sometimes checks received by the bank are not recorded by the bank due to a delay in the clearing of the check as well. Okay, sometimes it can also be due to bank's personal reasons, but mostly it is because the person did not go to the bank and deposit the check yet. So you understand the difference between these two. The main thing you should know is, let me summarize this. Leave all this. The important point which I want to make is, uncredited deposits are the money that you receive. Money received which is showing on cash book, okay, but missing from bank statement. Alright. On the other hand, unpresented check is money paid. You are paying someone. Again, this is present on the cash book but missing from bank statement. Okay? So unpresented checks are those that you pay to people, and uncredited deposits are checks that you receive from people. Okay? Remember this. Moving on to the technical example which covers everything. Before starting the technical example, let me show you what a bank reconciliation statement is and how do we prepare it quickly. See, bank reconciliation statement. Okay? See, I've told you the first step in the bank reconciliation process is to update the cash book, which means put those things that were present on the bank statement but missing from the cash book into the cash book and then come to a new balance. I've shown you that in the previous slides. So let's suppose our updated cash book balance is 750. So we will start with this balance of the updated cash book, which as you can see is how much? $750. Okay. What do we do next? We add unpresented checks to this. Unpresented checks are worth $250. Why do we add unpresented checks? I've told you what unpresented checks are. Unpresented checks are those checks that we have given to people, but they did not go to the bank to collect the money yet. So to come to the similar balance as per bank statement, we have to add these amounts back in our rough work or in the bank reconciliation statement just to justify the balance. So if the bank has not deducted this amount yet, we are also adding this money back to the cash book balance in a way, okay, to come to a similar figure or the same figure. Now, checks paid into the bank account but not yet entered in the bank statement. These are uncredited deposits, which means what they're trying to tell you is, okay, that you have deposited the check in the bank, but they're not showing on the bank statement, which means the bank has not recorded it yet. So you, as the business owner, you have recorded this in the cash book on the debit side, because when you receive a check, you record it on debit, but the bank has still not recorded this. So what will you do to come to a similar or same figure? You will simply do less uncredited deposits. You will also exclude this amount from the cash book balance, which is 160, and then less. In accounting we use brackets to show subtraction. Do the working for this. You should get the same balance as on the bank statement, because now we have fixed everything, we have traced everything, and we have found the reasons that why the balances were not equal. We have added back and subtracted the values necessary to come to a same balance. So let me do this. 750 plus 250 minus 160 gives me 840. And as you can see, the balance on the bank statement should be 840, and now we have also come to the same balance. We have explained the differences between the cash book and the bank statement and then come to the same balance. Now we know the reasons, right? So we are satisfied. We know that all right, these checks are still unpresented and these are uncredited deposits, so they will be credited and deposited. We don't have to worry. The balances are fine in a way. Okay, so this is just a check for the business to know and understand why there are differences, and then they are satisfied. Okay? So this is a simple bank reconciliation statement. It's only a 3-step working. Okay? You start with the balance of the updated cash book, you add unpresented checks, and then less uncredited deposits from it. You can also do it the other way around. Let me show it to you here, because in some questions they will force you to start with the balance as on the bank statement. So it's not difficult, it's just the complete opposite of it. So let me make it here in rough. Okay, so BRS, bank reconciliation statement, if you start with the balance on bank statement, which is 840, all you have to do is the opposite of this. So you will add uncredited deposits, which were 160, then you will less unpresented checks, which were 250, and then you will come to the figure of the updated cash book. You can use your calculators and check. Let me also check. So 840 plus 160 minus 250 gives us 750, which is the balance of the updated cash book. So you can do it using both ways, but they might ask you to start with the balance on the updated balance on the bank statement. Then you will have to do this and use this format. Otherwise this one is fine, you can use it for every question. Okay? Erasing this and moving on to the technical example now. Okay, so this is the complete example which will cover everything from the first step, which is comparing the cash book with the bank statement, then preparing the updated cash book, and then finally preparing the bank reconciliation statement and coming to the same balance. So let's begin. See, I've told you guys that you have to compare the debit side of the cash book with the credit side of the bank statement, and the credit side of the cash book with the debit side of the bank statement. So let's compare the debit side of the cash book with the credit side of the bank statement first. We have a balance brought down 7900. Is it also there on the bank statement? Yes. So I will make a tick like this to show that this entry is present on both. So we don't have to worry about making any changes or including, excluding anything. Okay. Now, P Masters 500. Is P Masters present on the credit side as well? Yes. So take this and take this. Okay. Sales 1900 on the debit side. So I have to find sales 1900 on credit. It's there. Ignore the dates. I've told you dates can be different. J.Qasim 200 on debit, so it should be on the credit side as 200. It is there as you can see. And then K Bandara 600 debit, so it should be on the credit side as well. Is it there? 600 on debit, so 600 in the credit side. No, it's not there. As you can see, it's not there. So I will simply circle this and leave it for now. Okay. Then we have sales 1220. Is it there on the credit side? No, it's not. So I will also circle this. So these two things are present on the debit side of the cash book, but missing from the credit side of the bank statement, as you can see. Okay, so we have circled these. Now let's compare the credit side of the cash book with the debit side of the bank statement. S.Co Limited supplier 1500. Let's find 1500. Yes, it's there. Look at the detail. Okay. So see, the dates are very different, but the transaction is present. So just take this. It's there. C. Patel repairs. So is C. Patel here 410? Yes. So 410 C. Patel, 410 C. Patel. P. Saghir cleaning $230. P. Saghir 230. Okay. It is also present on both. T Afzal a supplier. So we have paid 800 to T Afzal. Is 800 there on the debit side? No. So simply circle this as well. High Tech IT Service 140 on the debit side. Oh, sorry, on the credit side. So it should be on debit. High Tech 140. Yes, it's there. Take this. Take this. Telcel Telephone 300 on the credit side. So it should be on the debit side of the bank statement. Is it there? No. So circle this here. Okay. So we have compared both. Now as you can see, there are some things that are left unticked on the bank statement as well. So we will also circle those things. What are these things? Let's circle them first, then I will tell you. Then we have dividends. We have credit transfer received. Okay, what else do we have? We have direct debits, standing order, and finally bank charges. So these things are circled on the bank statement. Okay. Let me move this to the whiteboard and we will continue with the question. Okay. 1 second. Okay. So let's continue. Now, what is the first step? I have told you guys, the first step to start this process after comparing the cash book with the bank statement is to prepare the updated cash book. So I'm going to make it here. updated cash book. ठीक है. The purpose of the updated cash book is to include things that are missing from the cash book. Things that are present on the bank statement here but missing from the cash book. Okay? This is called updating the cash book. Things that are present on the bank statement but missing from the cash book. Obviously, we will include those things back to the cash book which are there on the bank statement but not on the cash book. So I've told you we start with the balance of the cash book, which is 8940 in this case. As you can see, balance BD 8940. Now let's include these things one by one. So obviously, things that are on the credit side of the bank statement should be on the debit side of the cash book. So interest, this is the interest that we received. So money is coming into our bank account, $60. Then we have also received some dividends, okay, which are worth $100. And then finally we have received a credit transfer from someone, which is $760. So we have recorded the things that were on the credit side of the bank statement on the debit side of the cash book, because this is the money we have received from people. Okay? Now on the credit side, we have made payments through direct debits. I have told you what direct debits are. So direct debits, and the amount is $700. Then we have paid for someone using standing orders, and we have paid $250. And finally we have paid bank charges of $30. So these are my payments. This is the money I have received, which I'm not informed about, or which I don't know about. Okay? Standing orders and direct debits are also payments through your bank account, as you know. Now we will balance this cash book, and we will have the balance of the updated cash book. So we are done with step 1. 8940 plus 60 plus 100 plus 760. The total of this side is 9860. The total of the credit side is 700 plus 250 plus 30, which is 980. So obviously the debit side is heavier. Hopefully you all know how to balance T accounts. 9860. So minus 980 from 9860 to get the balance carried down. 1 second. 9860. Okay, so you are getting 8880 as the balance carried down, and this will become my balance BD of 8880. So this is the balance of the updated cash book. As you can see, what is this? This is the balance of the updated cash book. Okay? Now moving on to the bank reconciliation statement. I'm erasing this because I need space here to do some working. Let's move this a bit. Okay, never mind. This space is enough. I can do it here. Okay, so now I will prepare the bank reconciliation statement here. Bank reconciliation statement, because even when I have this new balance 8880, it is not same as the balance of the bank statement. As you can see, the bank statement balance, the final balance is 8160. So there's still some things which we have to account for. Those two things, as I've told you previously, are unpresented checks and uncredited deposits. Unpresented checks are those checks that we have given to people, but they haven't gone to the bank to withdraw money. So in this case, we have these two as unpresented checks. Unpresented checks are always on the credit side. So let's begin. We will start with the balance of updated cash book, as I've told you the format, which in this case is how much? 8880. This is what we have found by updating the cash book. Okay? Now I've told you we add unpresented checks to it, which are 800 plus 300. Let me show the working here. So total 1100 worth of unpresented checks are there. Then less uncredited deposits. This is the money that we have received and we have deposited in the bank account, but it is not showing on the bank statement yet. So uncredited deposits are present on the debit side because this is the money that we receive. Uncredited deposits, and these are 600 plus 1220, which will make this 1820, but let me double check. 600 plus 1220, 1820. Less means minus, so I have to put a bracket here. Once I do the working for this, what should I get? I should get balance on the bank statement. Okay, let me do the working. 8880 plus 1100 minus 1820. So I'm getting 8160, which is the balance on the bank statement, as you can see. Let me zoom this in to show it to you. The balance on the bank statement, the final balance is 8160, as you can see, which means we have reconciled this properly. We did not miss any steps, we did not do any errors. Okay? And that's why we are coming to the same balance as the bank statement. So now let me give you a quick recap of the steps. Step 1, compare the cash book with the bank statement. Circle the things, okay, that are not present on both. Okay? Which things are we circling? Which are only present on either one of these. So these things that I have circled here are only present on the bank statement but missing from the cash book. Okay? So once you prepare the updated cash book, you have to include these things that were there on the bank statement, 1 2 3 4 5 6, and then now you have to include these into the cash book. So this is called updating the cash book. Okay? And then you come to a new balance. After that, once you have the new balance, which is this, you will include unpresented checks which are present on the credit side. Those checks that you have given to people, but they are not taken out of your bank account yet. So you add them back. And then less uncredited deposits which are on the debit side, these two. And then you get the same balance as on the bank statement. This is the entire process of bank reconciliation. Okay? Moving on. Now, the final reason, see, we have explained the differences and all that, but the final reason can also be some errors. There are chances of some errors, okay? So we have to correct those errors as well, and they vary from question to question, okay? So don't worry about those errors. For example, let's say you sold goods, sales of $100 were recorded as $150 in cash book. So this is an error, right? What were you supposed to do? You were supposed to debit your cash book by 100 because you were receiving $100 for selling goods. But by mistake, you have recorded this as 150 in the past, okay, before balancing. So what should you do? You will simply correct this error by crediting 50 now. You can write sales and you can write error. That's it. So you have deducted 50 from your cash book, which you had previously added by mistake. Okay? That's all you have to do for these errors. So errors vary from question to question. You will have to read that, understand what the error was, and correct it accordingly. See, there's no hard and fast format to correct errors. Now, a past paper question. This is a different format question. Okay? In your CIEs, you can get it in two formats. The first way to give the question is this way, in which they will ask you to compare the cash book with the bank statement. They will give you both the cash book and the bank statement, and you can compare it by looking at these. The other way of giving the question is this, in written form. Okay, there are no pictures of cash book or bank statement, but they have given you all the data in written form. Okay, so when you're doing this question, right, let me read the question first. Ottoman compared his cash book with the statement from his bank. So he's comparing the cash book with the bank statement and found the balance on the bank statement did not agree with the balance of his cash book. Obviously, only then he will have to prepare bank reconciliation statement. If the balances were equal, there's nothing to worry about and you don't have to do anything, right? Give two reasons why the balance shown in the cash book might not agree with the balance on a bank statement. They're asking us the reason. That how is that possible that there's a difference balance on the cash book and difference balance on the bank statement? You can simply write this can be because of unpresented checks. Checks that you have given to people but they have not went to the bank, okay, to collect the money yet. The second reason can be uncredited deposits. As you know, okay, there are also a lot of reasons. You can also write there can be errors, okay, even though they've asked you just two reasons, we have a lot of reasons. Okay, so there can be errors. Then there can be things such as bank charges which were present on the bank statement but missing from the cash book. So you have multiple reasons for this, right? So this is the theory part. As you can see, they also test you regularly on theory. This was for 4 marks. So you should know this. Another question they usually ask is the difference between standing order and direct debits. So remember that as well. Now, moving on to the actual question, in which we have to update the cash book and prepare the bank reconciliation statement. See, which three things are we looking for when we are reading these points? Okay? Don't read these points first. Say, you have to identify three things in this. The first thing is things that are missing from cash book. So you have to identify those things that are present on the bank statement but missing from cash book. Why? Because these are those things which you have to include in the updated cash book, the first thing that you make. So find these things. Then you have to look for unpresented checks and uncredited deposits, right? Because these are the things you need for the bank reconciliation statement in the next step. So let's read this and identify these three things. We are only looking for these three things, and maybe there can be some errors which we have to look for as well. Okay, so 4 things in general. Things that are missing from cash book, unpresented checks, uncredited deposits, and errors. You have to identify each one of these as one of these 4. Okay, I will do this for you now. On 30th September, the balance on the Ottoman's cash book was 850. Okay, so his balance was 850, but the balance on the bank statement was 1660. So there's a lot of difference. Okay. Now, the cash book was checked against the bank statement and the following differences were found. So see, like we compared the cash book with the bank statement, they are not asking us to do that. They have done that for us. They have just told us what were the differences. Okay. Now, checks totaling 250 issued to creditors had not been presented for payment. So what is it out of these 4? Is it things that are missing from cash book? Is it an unpresented check? Is it an uncredited deposit? Or is it an error? it is simply an unpresented check. So this is your rough work. You can simply write unpresented check as short. Okay, U.ch, unpresented check. This is your rough work. This is for you to remember that what is this. Now, rent received of $800 paid directly into the bank did not appear in the cash book. So we have received money in our bank account, but we are not aware about this. What is this? This is missing from CB. So I'll just make a cross and write cash book, which means this is missing from cash book. Simple. This is my rough work, so I can make my own codes. This is for me to understand and remember. When I'm making this updated cash book, I will remember to put this here. So you can make your own things up. Okay? Bank charges of $60 were shown on the bank statement but had not been entered in the cash book. Again, this one is missing from cash book. Cash sales recorded as $1,200 were shown on the bank statement correctly as $1,500. So it is an error. Okay, what is this? This is an error. This is not an unpresented check, uncredited deposit, or missing from cash book. This is simply an error. We have recorded cash sales as $1,200, but they were recorded correctly on the bank statement as $1,500. So which means we have to record $300 more on the debit side of cash book. Simple. Because the actual money we received was $1,500. We have recorded it as $1,200. When you sell goods, you receive money. We recorded it as $1,200, but it was correctly recorded on the bank statement as $1,500, which means you have to record $300 more on the debit side of the cash book. I have corrected the error there and then. Okay? So you can do it like this. So when I prepare the updated cash book, I remember to debit $300 in the cash book. Now, a check received from hands for $480 and deposited at the bank. We are receiving a check. Okay? Had been entered in the cash book but not yet shown on the bank statement. This is simply an uncredited deposit. I have told you the definitions of these, so you should be knowing what an uncredited deposit and an unpresented check is. Okay, so let's start preparing the updated cash book. Now the process is the same. Okay, we will start with the balance brought down. They have told us it's $850 debit. As you can see, the balance on Ottoman's cash book was $850 debit. So $850. Okay. They've also told us on which date we are balancing the cash book and updating the entries. So you can simply write 30th September. Say. Now you can also write 30 September once on this side and then move on. Now, which things should I include here? I have to include the second one because this is not present on the cash book as I have identified this. So let's read this. Rent received of $800 paid directly into the bank. When you receive rent, on which side of the cash book should it come? You're receiving money for rent. So obviously we will use the debit side and we will write rent received. Okay? You are receiving money. So you should be able to identify by reading the transaction. Are you receiving money or are you paying money? If you're receiving money, you will debit. If you're paying money, you will credit, because assets when they increase are debited and assets when they decrease are credited. Debt click. Okay. Third one, bank charges. I have to include third one as well. Why? Because I have identified this earlier as missing from cash book. So bank charges of 60 were shown on the bank statement but had not been entered in the cash book. So 60 on the credit side because you pay bank charges. You don't receive bank charges, you pay charges to the bank. So in details you can write bank charges. Okay? And then finally this error for which we were supposed to debit the cash book by 300. Now you can write sales and you can write error in brackets in front of this. We are done with putting all those things into the cash book that were not there. Okay? These were the things that were present on the bank statement but missing from the cash book. So we have updated the cash book in a way. Let's balance this now to get the new corrected balance. 850 plus 800 plus 300. This side is 1950, whereas this side is only 60. So 1950 is the total of the heavier side. Okay. So what do I need here to balance this account? I need 1890. How? 1950 minus 60 is 1890. This becomes my balance carried down. Okay. Now 30th September, balance brought down. This is the new corrected balance of the updated cash book. That's it. This is how you update a cash book. Okay, simple. And this is, as you can see, for 8 marks. So this is a very basic topic in which you can score really good marks. This is not difficult. Okay. Moving on to the bank reconciliation statement. The next step is to prepare the bank reconciliation statement. Okay. So let me, one second. Okay, let me copy all this to the whiteboard and we can do it there. Let's erase this, move this here. Okay, I will have to reduce the size of this though. Okay, so we have all this information available with us now. We simply have to prepare the bank reconciliation statement. So let me do it here. Bank, or one second, in your CIEs they give you the format, so you don't have to worry about making it yourself. Let me open the slide and one second, bring the format here. Okay. So see, this is for 7 marks, as you can see. Let's copy this. Reduce the size. This is enough. Move this aside. Okay. Now, how do we start the bank reconciliation statement? We start with the balance of the updated cash book, which we have just figured out as 1890. Okay. Then we add unpresented checks to it. We had identified the unpresented check, which was only one. Checks totaling 250. So unpresented checks are 250. This is what is the advantage of doing this earlier. I know we had just one unpresented check, so I have included that here. Now less uncredited deposits. Again, we had just one, as far as I remember. Let me check. Yes, we had just one. A check received from hands for 480. This was my uncredited deposit. So 480. Less means minus. Use brackets. And when you will do the totaling, you should get balance on the bank statement. Let me use my calculator. 1890 plus 250 minus 480. I am getting 1660. Okay, let's check the question. The balance shown on his bank statement was 1660, which means we have reconciled the cash book with the bank statement and figured out the reasons why there were differences. So this is it. This is what you do. Okay? Let's look at the objectives now. Okay? They wanted us to know the use and purpose of the bank statement, which we have done. How to update the cash book for bank charges, bank interest paid and received, correction of errors, credit transfer, direct debits and standing orders. We have done that. This is the updating of the cash book. Then to prepare the bank reconciliation statement to include bank errors, uncredited deposits, and unpresented checks. Okay. Errors can also be given in the questions, but they will vary from question to question. If there is any, you just do the correction there and then. Then this is for those who will appear from 2027 onwards. So if you are appearing in 2026, you don't have to worry about this, but I'm going to cover this now in this video. The impact of digital business transactions on the bank reconciliation process. Okay, this is just theory based and nothing special in this, but let me go through this quickly. So these are the notes for that. Okay. Let's just simply read these points, that what are the advantages of digital banking in reconciliation process. Digital banking helps saves time for customers and bankers, as there is no physical requirement to visit a bank branch. Now you have mobile apps in which you can get your bank statement there and then, so you don't have to visit branch or wait for the end of the month. Okay, that's basically the point. So you have real time data access. Okay, anything is available there and then, you don't have to wait, you can easily reconcile there and then. Okay, digital transactions are there, so everything is recorded, and you can access your bank application in your phone and go through that. You can find any differences and make reconciliations. You don't have to wait for the month to end to receive the bank statement and make changes. So things are very easy now, but at the same time there are some limitations. Okay, there can be some technical problems, there can be duplicate transactions which you will have to call your bank and fix them then. And then, as you know, there are security concerns and digital banking apps are not that safe. Okay, so that's it. This is just basic theory, that how things have changed and how bank reconciliation is now easier compared to what it was in the past. Okay, that's it for this video and this chapter. We have covered whatever is the requirement of the syllabus. See you soon in the next video.